Let's take a look at some information and charts on Uniswap for Brave New Coin. So Uni is one of the OG AMM dexes with 50-50 pools. It's also got a governance component thanks to the Uni token. I'm not sure how governance worked pre-token. I'm sure they had governance. But that's ancient history at this point. So the token is used for governance, as are all of the tokens, although that itself will not and will never move the needle. Because really, if you disagree with something and a community disagrees with something, they can just fork off, right? So if there's a cabal of people who vote for something who's against the interests of a large group of people, they could just fork off. There are some complications with that, but that's part of just open source code. We saw that with ZRX a few times already. So I wouldn't, bet on governance of anything to hold value of a token. Here's how the swap works. I think eventually everything's going to move towards aggregators if there are multiple dexes. If dexes survive long term, which I'm sure they will, then we're just going to move more towards the matcha side of things, more towards the 1-inch side of things, Enzyme, Paraswap, anything that can do the shopping for you and get you the best price, get you the best route, anything that helps you avoid fees, avoid getting front ran, that sort of stuff. That's all the future for most people, unless they're a Uniswap maxi or an ETH maxi. But eventually we'll just be multi-dex, multi-chain, unless there's a clear winner. Now Uniswap gets 50% of the volume for all dexes on any given day. And I really doubt that most people visit Uniswap, the portal itself. Maybe I'm wrong there. I think a lot of that volume comes from other stuff, Xerion, DEX aggregation, anything that can plug into Uniswap. That's the beauty of using stuff like MetaMask, where you can just plug and play into anything instantly. And then overall, it's a pretty smooth user experience. If we look at some of the analytics for version 3, now here's where the interesting stuff starts, because we have 3 versions. And although Uniswap isn't multi-chain, we do have dexes that are multi-chain, multi-version, and they don't talk to each other necessarily. So you have to look at all of these stats individually and try to interpret what's going on. So here's version 3. Overall, TVL is flat, kind of since it started. Here's the ramp up ever since then. TVL is flat, volume down and flat on version 3. You can see all the pools individually here. And I don't know enough about Uni intimately to know whether version 2 is better than version 3. All I can see is there's more liquidity on version 2 than version 3, right? So the market is telling me, hey, maybe version 2 is easier to access, is better in some way. I don't know. But if version 3 was amazing, you'd expect all of this liquidity to just migrate. But there's a reason. Maybe it's fees. Again, I have no idea. But there's clearly a reason why people are still using version 2 over version 3. Volume here looks much more dire than it does on version 3. One thing that's a bit annoying is that all of these analytics are on their own page and different UIs. If the Uni people are listening, aggregate this stuff, because it's a bit silly to look at all of these on different pages. Here's version 1, which still has 10 million in liquidity. Doesn't really see too much volume. In a perfect world, they need to deprecate some of this stuff at the very least. Just get rid of version 1. I don't think they ever will, because people are still using it. So until volume and liquidity go to 0, which effectively volume is basically 0, transactions basically 0. Maybe there's some ARB opportunities. I don't know. There's just too much stuff. That's why aggregators, I think, are the way to go, especially for new people who don't really know enough to tell you oh, this is version 2. I should be using this over this. Anyway, so that's my gripe about the version stuff. But here are the pools. And for the most part, you're going to see stablecoin pools at the top. You're going to see BTC and ETH pools at the top. And you're going to see Uni pools at the top. These look like they have variable fees, obviously variable volume. And if we sort by volume, ETH pools have had the highest volume over the past 24 hours, but that'll shift, obviously. And unlike Sushi, I believe the Uni listings are more permissioned than, say, Sushi or some sort of other free roll DEX where you can list any scam imaginable. Seeing Hex and MM, I think that's the spell stuff, reminded me of that. You're always going to see the majors on these swap platforms, but you won't always see clear scams like Hex, which shouldn't be traded and is definitely a Ponzi, and some other stuff that's had issues like Phi. But again, I don't think most people are using Uniswap, the website. It's probably hard to measure, but some of this stuff, I've never even heard of, and it's still listed here. So take that for what you will. And the tokens themselves, you can also look at and sort through. The typical stuff's at the top, volume-wise. ETH, BTC, stablecoins, Uni. You're always going to see, Sushi's sort of the top of the list on Sushi, that sort of thing. Staked ETH. Link is a typical top volume coin across all of these dexes as well. And if you look at all the dexes based on volume, over the last 24 hours, of course I'm doing video on Uni and it's not 50% or greater, but most days over the past 24 hours, Uni is 50 or greater. I've seen it as high as 55+%, and that really doesn't bode well for things like Sushi. Curve is mostly stablecoins or like priced assets like BTC, different versions of BTC, different versions of ETH, but mainly stablecoins. So I'd personally exclude Curve from kind of the DEX competitors stuff, but to see Sushi lose volume continuously is definitely bad for Sushi. Volumes on the aggregators could be incentive based as well, in that they're influenced, like 1inch, for example, if there's liquidity mining. So you have to keep that in mind. There's usually reasons why things are the way they are. But it's very clear to me that Uni is the clear market winner still in swaps. It has been really since the beginning. It had an insane month in May, rivaling 83 billion in volume, rivaling centralized exchanges. So this thing isn't going anywhere. Now we can look at this stuff a little further and look at annualized revenue by protocol. Uni usually a clear leader there. This is all supply side, meaning it's all based on volume, whereas protocol revenue is a bit different and it's sort of kind of fixed, changes based on governance stuff. But let's say in a bear market, right, supply side revenue is probably going to decline, whereas protocol revenue may not decline as much. I expect supply side revenue to decline significantly. Opposite is true in a bull market. You expect supply side revenue to increase significantly and protocol revenue to increase probably not as much. But this is the initial step you can use if you're trying to look at, Uni versus Sushi versus Curve versus Bancor, Balancer, Kyber, Aave, Compound Maker are lending and borrowing, Synthetics as well. So it's a bit different. But you can look at these together and say, okay, what's the annualized revenue? I think we have enough data now for a complete year's worth of actual revenue. So that'd be interesting to look at as well. But we can look at TVL divided by annualized revenue. And you can say, okay, if you think TVL is worth paying attention to, I think it's a bit early to really know what TVL is telling you. But looking at this, these would be your better buys versus Curve, which has an insane TVL versus revenue. But again, Curve's a bit of a different animal because it's mostly stable coins. So that's just going to eat TVL continuously because that's just a better place for a lot of low risk people to place capital. And then ultimately, PE ratios are what a lot of legacy traditional analysts look at. And that would be market cap over annualized revenue. Sushi at the bottom here, Uni towards the middle. So you could say, all right, well, if you're a PE maximalist, you're saying Sushi is a better buy than Uni because of market cap over annualized revenue looks more appealing. One thing you could also look at is diluted market cap over annualized revenue, right? We can tease this apart in a million different ways. I think it's too early. I think it's too early to know if any of this stuff really matters. That's why just the layer 1 metrics, TVL, transaction volume, users, I think is the most important. Stats on V2 again, TVL declining, volumes down significantly since May 18th, transactions down significantly since mid-May, users down significantly since mid-May, Oracle calls down significantly since March, right? So all of this is down and on the right. It's no surprise the price is sort of floundering here. These token prices of these exchanges won't be directly correlated with this stuff, but it's pretty clear less volume is bad for anything crypto across the board. We need transactions, users, volume, TVL, all that stuff is important to keep the bull flowing Version 3 stats, same thing. Trading volumes down, transactions kind of flatlining, slightly up. Users basically flatlining, not as dire as V2. You could say maybe some of this stuff migrated from V2 to V3. And we can also look at sort of aggregate TVL, again on DeFi Llama, which doesn't look accurate to me. So this is why I always tell people to look at multiple sites. If you're looking at TVL, it's important to look at it many different ways, many different websites. It's all going to be different. You can probably trust the DEX itself more than stuff like DeFi Llama or DeFi Pulse or DeBank, but just keep that in mind. Here's transaction counts over average transaction values in the fill here. Here was the initial token release. Since then, for the most part, transaction counts have continued to decline of the token, and you're probably not going to move the token too frequently. It's a governance token, really, other than using it in AMM sort of situations. So I wouldn't expect this to necessarily be continuously mooning. But NVT is rising, active addresses declining, right? Again, that's not a bullish picture for anything, no matter what it is. You want everything up and to the right. Here's Google Trends, again, down significantly since May. This is just echoing everything else that we're seeing, where all that mania, euphoria is wearing off on most of these DEXs. Switching to technicals, 5200 on the 12-hour monthly pivots volume profile, volume per day down here, and then RSI. So Uni's still up 300% since its January open. That's where most of the volume sits. That's where an S2 pivot sits at $5. Now that's going to be a significant downside, right? You could say maybe this is an Adam and Eve. Maybe this is going to morph into some diagonal inverted head and shoulders. But ultimately, if you're below the 200 period moving average, if you have a death cross, the expectation is weakness in price. The expectation is lower lows. That's why these indicators exist, is to help you figure out what kind of trend is this. Is it a bear trend? Okay, then we know what we expect to see here. We expect more selling than buying. In a bear trend, we expect number to go down over time. The question is, if you're buying this stuff, like if I have it in Enzyme, for example, has this pullback been enough from the top? Are we currently more sideways than bearish? Can we extract yield from this stuff? Those are the questions you have to ask. You also have to ask, is it worth DCAing into this on the way down if this stuff has legs in the future? You look at that 400 to 500 million annualized revenue, and a lot of people get extremely bullish on that. But my counterpoint is I can't see that on the chart. I can't see uni volumes on the chart. I can't see uni dominance on the chart here. Maybe it's held 300% since January, better than other exchange coins, but overall it's still kind of just as weak as everything else. So if this does turn south quickly, you expect 13 to break, and really you expect a retrace to 5 with some spikes lower than that. That's if things get ugly across the board. Daily Cloud is telling you there's a mean reversion attempt to 28, somewhere in there, 28 to 30 in the making, based on the Kijun, based on the flat Kumo here. If we do not make lower lows, there is a high likelihood we go to 30. That's very much an if this then that situation. If this looks bullish to you, you're hoping for mean reversion. If this looks bearish, you're hoping for lower lows, right? That's just easy baseline analysis. It's below the cloud, so it's telling you, just like below the 200, that this is probably going lower more often than it will go and make higher highs. It attempted this travel through the cloud, this edge-to-edge trade. Thus far, it looks like that got denied over the past 2 days. Fell below the cloud, below the Kijun in a vacuum. That's a stop out of an edge-to-edge trade. Your entry was somewhere in here based on cloud entry plus bullish TK cross. And the stop loss for that is always either the Kijun or the cloud, and it's below both. So it doesn't look too good on that front for a move to 30. We can also look at this on the 8 hour, and you can say on the 8 hour, it never got back above the cloud. It magically got denied right before that Kumo breakout. So going forward, you can say, all right, until this is above the 8 hour, I'm not touching this. I know the targets are around 30 based on the 12 hour and the daily, but until it's above the 8 hour, I'm not going to get in that. 12 hour Uni-BTC, also basically bearish, but also ranging. I don't think there's a signal here. You could argue Adam and Eve, just like you could argue Adam and Eve here. But until it's above that diagonal, it's just probably in a void for most people. Downside here is probably 44K sats. And then below that, where all the rest of the volume is here at 20 to 16K sats. But this doesn't look insanely bullish to me. Uni ETH, though, looks much more prepared for an Adam and Eve bullish reversal. You have resistance at specific volume levels. You've got tons of monthly pivots on the way up. And you've got this 5200 cross to watch if this thing does turn bullish. This is on Kraken, so the volumes might be a little wonky, but it's better than artificially making the pair on TradingView because I can actually see real volumes here. So if I was bullish on this, I would be waiting for a break of 01, basically. That should come with the 12-hour 5200 cross. So DEXs aren't going anywhere. Uni's dominance probably isn't going anywhere. The analytics are kind of all over the place, but ultimately are down and to the right, not what you want to see if you're bullish on users, transactions, and volume for anything. Google Trends down and to the right, right? And all of that is showing on price, despite volumes and revenue being higher than everything else on the planet relative to DeFi. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tools, where you can send ETH or USDC into the smart contract, allowing me to trade those funds, effectively copy trading. Or you can just watch what I'm doing. You can see AUM, allocations, performance, all the trades I make, all the deposits and withdrawals. You can see me trading through Paraswap, Comp, Aave, Yearn. You can see I've got Uni in here in Compound right now. And on my yield dashboard, you can see what is getting yield and what isn't. And that influences trading decisions along with TA, along with FA. Getting some comp stuff here, but I can also search for Uniswap specifically. This is just an example of stuff that I do on the back end. And I could say, okay, I can get some comp rewards, right? So it's worth, even though it's next to nothing, it's worth just tossing it in there for an additional yield. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.